Wildcat Economics, episode 4. I think we're hoping to get to the point where we don't have to number the episodes.
That's true.
But as we, are under 10, I think that it's important to say this is our 4th episode. And we're so excited. We've got Alex Crowley here today. Alex, welcome.
Thank you. It's good to be here.
Little change. The last 2 episodes we've had some small business owners talking about food. Today we're having Alex who works at Tab Bank, Senior Vice President, and is going to give us some good information on banking, the Federal Reserve, all those things. And my goal today is to hopefully rein in anytime we get off on a topic where our listeners may not understand. I'm going to play the role of, hey, explain that to me like a child, all right? So if I say that a couple times, it's to make sure we understand what we're talking about, because
it's definitely for the audience and not for Connor.
Yeah. Well, we use a lot of econ speak, and sometimes I know me when I was growing up, I would just kind of go, yeah, I know what that means. And then eventually I actually looked it up and it made sense. So it would have been nice to just take a step back. So might do that a little bit.
That's really the purpose of the show. Take the big headlines, what we're seeing out there in the world. How does it impact Northern Utah in a jargon-free manner? That's
sure thing.
That's my goal.
Sure thing. All right. Well, as I mentioned, Alex is joining us today. Alex Crowley is Senior Vice President at Tab Bank. Tab Bank is right across the street from Weber State University. Some personal notes here. I recently got an account at Tab Bank a few years ago. I don't know if you're driving down I-15, you will see these billboards. At the time, they were offering some of the highest interest rate yields, which we'll talk about today, what that means. And I was like, this is awesome. It took me maybe 5 minutes to set up an account. I was really impressed.
That's great to hear.
So I've been enjoying it. Another personal note, probably 2019, I was a student here at Weber, and I went to an event. It's called the Student Economic Alliance.
Student Economic Association.
And
really left an impression on him.
Yes. Alex was there. I think Alex was speaking. And, at the time, I didn't really know politics or economics. I just kind of went with, what my dad told me. And, my podcast I listened to always told me that the government ruins everything. And I saw Alex, this really cool, smart guy. And we were mentioning this. We were saying the government ruins everything, yada, yada. And he was like, is that true? And literally from that day, I was like, wait, people have other perspectives. And from that day, I've been realizing that it's not always true that the government ruins everything. There's a lot of perspectives out there. So good example of go to your clubs, meet some people both within and without the university, and maybe you'll have a idea correction or a new perspective that puts you on a good path. So that's how I always have remembered Alex, of just that little bit.
That's very flattering. Yeah. I'm glad it wasn't too intellectually distressful.
No.
So
no, it was finally like, wow, this is the marketplace of ideas. So it was good. But I want to give Alex some time to introduce himself. Alex has an awesome background. It started here at Weber, brought him to a lot of different places. But talk about, you're at Tab Bank. What came before that? Anything you want to discuss here?
Yeah. So really quick, just the quick disclaimer, my opinions don't reflect Tab Bank. I'm not paid to be here. I know, that probably goes without saying that I wouldn't be paid to be here.
You did give him a free parking pass.
I did get, which at Weber State is worth a lot of money. So if you see it on Craigslist later, you'll know who's selling that.
For sure.
But yeah, I've been with Tab Bank for a long time. So I went to Weber State, graduated from here in my degree in accounting, went to Texas A&M for grad school, became a CPA.
Nice.
Worked for a couple different banks, but Tab the longest, and now I'm the Senior Vice President of Strategy there, so really help the executive leadership team, senior leadership team around strategy of how do we attract deposits, like what Connor was describing, how do we help deploy capital and make sure we have loans that are packaging loans in ways that clients find helpful and impactful as they're trying to grow their businesses. Our whole vision of the bank is to build value in all we do, and we feel like we do that by accomplishing our mission, which is to unlock financial dreams with bold financial solutions that lift and empower. So trying to provide consumers with a way to save money and earn some interest in their deposits, but also, we help some of the kind of coolest, most interesting small businesses around the country, and happy to talk about some of those later. But really happy to be here. I've loved Weber State. I think it's an incredible institution, and so it's an honor to be back here, and congrats on episode 4.
Thank you.
Thank you. And I think it's an interesting thing to think about as, when we look at these big banks in the world, like JP Morgan, Wells Fargo, like a lot of these massive companies, when they first started, they were actually a little different of what they are today. So Wells Fargo, originally was a cargo company. They would transport goods on wagon. If you ever see Music Man, they talk about the Wells Fargo wagon. And now they're, a massive commercial and consumer bank. I think Tab Bank had a similar, start where maybe you were doing one thing with trucking or something of that nature, and now Tab Bank is becoming more of a consumer bank. Am I correct there?
Yeah, so we were started as part of the Flying J empire, so that all used to be based up here in Ogden, and so we got started to help truck drivers and transportation companies basically reduce their cash conversion cycles. So, right, a truck driver drops off, a truckload of goods at a Walmart, they may not be paid for, whatever the contractual arrangement is, 90 days, 180 days. Well, that truck driver's incurred fuel costs and driver costs and tire repairs potentially, and so we would help provide some financing them. Since then, we really broadened out from that, and now we help kind of a myriad of small to medium-sized businesses all across the country. Awesome. And so, just like other banks try to evolve with what our clients need, how do we offer more solutions for more people?
Yeah, we talked about that a lot on the podcast about how the best businesses, whether massive, small business, even as a student, one of your talents in life that you want to develop is the ability to pivot and be willing to maybe give up your identity from the past and do something new, which is somewhat what Tab Bank's done. And today I think that my interaction with Tab Bank is this is a very tech-filled bank. I would have never thought that it got its roots in something else, but maybe you wouldn't have thought that of Wells Fargo either. So, yep. All right, enough of me rambling. Let's talk about the Fed. Okay, we've heard this term a lot because over the last couple of years, we've seen interest rates rise, and mainly people have been impacted by that idea of wanting to buy a home or take out a loan. They've noticed because interest rates are high, whatever that means, we'll get into that, my monthly payment is more. And because my monthly payment's more, I have to wait until rates go down. And everyone keeps saying, we just need rates to go down and then I'll be able to afford X product. But this all has to do with the Fed. And the Fed's chair, remind me his name.
Jerome Powell.
The Fed's chair has, kind of been in the news lately because he's kind of the arbiter of whether rates are going to go up or go down. That's not necessarily how it works. We'll get into that. But everyone's kind of been looking at him as he needs to lower rates. And he's been getting pressure from the government, which is an interesting thing because the Fed is supposed to be independent of the government. It's one of the first things I learned in my econ classes was that the Federal Reserve, that's what the Fed means. The Federal Reserve is actually a quasi-government agency. Again, we'll get into that. But let's talk about a little bit about how the Fed got started, what its goals are, and how it accomplishes those goals through interest rates and through other means.
Sure. So, the Federal Reserve is what we call the central bank of the United States. And it was established in 1913. So it's actually the third central bank that we've had in the United States. We had the first Bank of the United States. We had the second Bank of the United States. Each of those had their own stories behind why they were, were kind of let go. And then, by the time we got to 1913, we decided we needed a different name than Third Bank of the United States. At that point, it starts getting embarrassing. So they called it, technically it's called the Federal Reserve System. And like you mentioned, it's a quasi-public entity in that it's essentially structured a lot like our federal government. Like you have the national, state, and local, and the Federal Reserve is very similar to that. You have what's going on. You have Jerome Powell kind of at the top. It's who everyone's looking at. But then you also have 12 Federal Reserve banks spread across the country, and those have presidents who kind of guide what each of those individual banks is doing, and each one of those is basically elected by local bankers and industry leaders. So there is a democratic component of this, except for at the very top. Those, Jerome Powell and the Board of Governors who are in Washington, D.C., they are appointed by the president and confirmed by the Senate. So that's just kind of a little background on the structure there. It has a really big tie to northern Utah in that when you when anybody talks about the Federal Reserve, they'll usually flash a building up on the screen. All right, that main building is the Mariner Eccles building, and it is named after
Eccles names everywhere.
That Eccles, that family here. Mariner Eccles was born in Logan. He actually, if I'm remembering my research correctly, he did his college education at a school. It no longer exists, but it was basically here in the Ogden area. Like it was in this region. So I'm going to claim Mariner Eccles. He went to Weber.
Yeah.
Okay.
Yeah.
It wasn't Weber, but it was basically Weber.
Well, the Eccles were like railroad family, and that's obviously
Exactly.
Ogden.
So he ends up going on to be basically what Jerome Powell does. He's the chairman of the Board of Governors in the basically from the mid 30s to the mid 40s. So right there during the World War II era, made a huge impact, dramatically changed what the Federal Reserve does, because what it does today is very different from what it used to do back in 1913. Like back in 1913, it was just a stop financial panics. Now it's there to help guide the economy on a month-to-month basis, and it has two basic goals. It has low unemployment. That's a big one. Want to keep people working, and it has a 2% inflation target. So basically, wants to keep prices growing, yes, but at a slow and stable rate. And that's kind of what we've been fighting with lately. Unemployment's been very good since COVID ended, but we've had that spike in inflation. That's what we see the rise in interest rates. That's meant to combat that inflation. Now that inflation is kind of coming down, we're starting to see a little bit of uncertainty in the economy due to whether it's tariffs, geopolitical issues, the government shutdown that's still going on right now. All of these different types of things. We're starting to see them lower interest rates. They just lowered it by 0.25%. Last meeting, their next meeting is at the end of October. There's a little uncertainty as to what we're going to get there. Initially, we thought maybe another quarter point, but if the government shutdown continues, there's no data, right? We already missed one, jobs day report. We would miss at that point basically another one. We'd miss a CPI report. So right now, the Fed is kind of flying blind, hoping to bring in other pieces of information. And you mentioned the idea that they're supposed to be independent. It is, I guess supposed to be is kind of a strong way of going about it. Economists prefer it when it's independent because as we've seen, especially during the Trump administration right now, there's a lot of pressure to continue to lower rates. And that's really what we're going to see on a regular basis is that, we want, when it comes to politics, right, their goal is to get reelected. And how do you get reelected? You have a good economy. You have a good, hot economy. Everyone has jobs. Things are good. And how do you get that? You juice the economy with low interest rates. Now, I will also say that what we're seeing from the Trump administration right now is not actually that unique. And that actually the period of relative quiet from the White House was kind of an anomaly, basically from the George H.W. Bush administration all the way up through the Obama administration. It was basically, that was that period of time when everyone just kind of agreed, let's just let the nerds do their job, let them go deal with be the technocrats, and we'll deal with our side of stuff. And so, coming in and with the tweets and even talking about it with reporters, putting the pressure on the Fed, that is not new at all. There's a lot of interesting stories, even like physical altercations between presidents and the chairman of the Federal Reserve. So it's a fascinating history that I won't get too much into. But all of that kind of being said, we're starting into this rate cutting cycle. They're starting to bring interest rates down a little bit. Alex, from the bank's point of view, when you're looking at these types of things, what decisions do you have to make when you're either going through rates going up, rates going down, whichever way it's going? What impact do you see in your day to day or week to week from these types of decisions?
Yeah. Well, first of all, I thought it was a great assessment of what the Federal Reserve does. And I think simply put, right, when they set interest rates, that's sort of the minimum cost of money, right? If you think of interest rates as a price for money, that's sort of the minimum price of what a dollar costs in the United States to either borrow or hold on deposit. In upward cycles, right, we're kind of battling with, we're trying to manage our deposits. How many deposits do we have from all these various sources, and trying to keep up with, well, what are the new expectations of consumers versus how much deposit dollars the bank needs versus what are our loan clients, some of them similar to homeowners, right? Like at some point it may become challenging for them to continue to finance if rates get too high. And so it's trying to work through some of those challenges. Same thing on the downward slope of we've got to be really thoughtful and strategic about lowering rates and stuff. And so we try to be really thoughtful about it internally. I think the best way to think about it from a bank's perspective is deposits are like our inventory, right? That we use to then go loan out to, consumers or businesses. We primarily lend to businesses. And so as that inventory is constantly changing in price, and we don't necessarily set that, right? It's sort of the market through the Federal Reserve that sets that. It can create some challenges for us because, you're trying to keep these, two people that want different things, right? Depositors want the highest rates possible, borrowers want the lowest rates possible, but obviously we've got to bake in some sort of premium for us in order to make money. And so it does create challenges where for a long time, the Federal Reserve operated under what's called ZIRP, zero interest rate policy, right? Where they basically kept it at 0%. And so your savings account rate pretty much stayed the same throughout that, 8-year, 10-year period post-financial crisis. And loans relatively stayed about the same price, right? Maybe with a little bit of changes here or there. Now it's been really challenging, right? Because the Federal Reserve raised rates really quickly. What was that, the spring of 2023, where over an 18-month period, I think it went up 500 basis points. Basis points is just percentage. So 500 basis points is 5%. 100 basis points is 1%. Just trying to remove the jargon, we said.
I was about to step in.
Yeah. We love to use basis points.
Yeah, but that's what created challenges for both banks and consumers and clients. Because to your point, just to kind of bring this full circle to what you said earlier, is for a lot of homeowners, it was well, I have more kids, I need a bigger home, but it's just not affordable. And so trying to time it has been really challenging for people because rates went up so quickly. Now there's this expectation they're going to come down. How much, how quickly, we're still waiting to see. But that's why we try to have thoughtful models. We try to be really thoughtful of where we're getting deposits from. And just like any good business, right, we try to diversify our deposit base. So as you meant, as we were talking beforehand, right, we have done billboard campaigns to bring in deposits from consumers. We have different deposit products for commercial clients like small businesses. But it can be a real challenge trying to make sure you have the right amount of deposits for your loan book and whatnot, because we want to be there for our clients when they have opportunities to grow and stuff. But we also really want to make sure our depositors appreciate the services we provide. So it's a challenge to figure out on a month to month, but certainly a year to year basis.
Yeah, and on the basics of banking, basically, that your profit margin is essentially the interest you earn on those loans minus the interest you pay on your deposits. So there's always kind of a struggle there. You want to bring in as many depositors as possible. The way to do that is, like you mentioned, high yield accounts, right? Higher interest rate accounts. But that eats into your profit margins. And so some of that might have to get passed on, some of it doesn't. It sounds like you have some very extravagant models that you kind of place.
Extravagant's probably a flattering term, but reasonably effective models that try to help us understand, because we deal with what's called interest rate risk of we try to constantly model, well, what if tomorrow, or let's say the end of this month when the Federal Reserve makes their decision, what if they dropped rates 1 or 2% or 100 or 200 basis points? How would we react? How would that impact our income, or vice versa? What if because they could just surprisingly, I don't think they'll do this, but they could raise it pretty substantially. And so, we're kind of constantly running these different scenarios and how we'd react and trying to be a little more thoughtful and proactive, similar to what any, consumer or on a personal level, right? You're trying to always think, well, do I have enough? And, have I prepared accordingly? Have I set aside money for these potentially different things? We just try to do the same thing of well, if they raise rates a bunch, how would that impact us? If they lower rates a bunch, how would that impact us? But again, you're trying to manage these inventory levels where prices are sort of being set outside your control. Maybe the other interesting thing I think some people would find fascinating about banking is we sort of operate different from every other business where for most of our clients, they will sell as much of their product as possible as long as it's profitable. for banks, if we grow too quickly, that tends to be how most banks get into trouble, is they lend out too much too quickly into a bad environment, right? We saw that in the great financial crisis. We've seen that at other times. And so John Maxfield, who's kind of a mentor and friend of mine, likes to say that most businesses operate on earth, and they're trying to do everything they can to break gravity's hold and get to economies of scale and get to like higher and higher profitability and stronger margins. Banks operate on the moon, where we're constantly trying to increase gravity, of like stay
Yep,
level-headed,
yep.
grow is like maybe about 5 to 10% a year, maybe a little bit faster if you have an acquisition or something, but otherwise. And so it's kind of this inverse thing where if we are growing too quickly, it's like, oh man, like why, what's going on here? Why are so many people, signing up for this? So it's this weird battle of like, banks play this huge role in trying to provide capital to these different businesses, and we want them to grow really quickly. But if we're growing too quickly, that can sometimes create dangerous pitfalls for us. So it's just kind of this unique juxtaposition between banks and how we operate versus how like a traditional company operates.
So bankers just go around asking themselves, is this too good?
Yeah.
True?
Bankers don't live on this earth.
That's right. Yeah.
It's getting too good. You're the pessimist.
We're the aliens everyone's been looking for.
For sure.
Yeah.
So from what I've learned so far, first off, we should be the Weber State Mariners to give respect to Mariner as a very important figure. So I'd be okay with that. The second thing I'm learning, okay, you talk about interest rates, and you're saying that's basically the base cost of $1. And I think about it this way. If I was running a corn dog stand and my price of cornmeal went up, then to maintain equilibrium, I would need to increase the price of my corn dogs. And if the prices went down, then I could lower my prices to try and compete with other corn dog. The same thing's happening with banks, it sounds like. The Fed is setting a rate at which money can be borrowed, and that's between banks to banks. Is that correct?
Yeah, so the actual interest rate that they set is what we call the federal funds rate, and it's literally the shortest, safest interest rate in the market. It is the overnight rate that one bank will lend to another bank. And there are various reasons why banks will share funds and lend to each other. It has all kinds of things to do with regulation, things like that. But that's the one. And basically, they talk about that one rate, and then everything else kind of builds on that. And, maybe that's where, Alex, I want to chime in. So when you see that kind of rate, and then you're thinking, okay, I want to make a loan to a local business, you start there at your baseline. What do you add to that to, generally speaking, okay, I'm sure every situation is different. What do you add to that to get to that final interest rate? So this is the same basic process that, like, if you're taking out a mortgage loan or a car loan, that, what are some of the things that you look at when you're determining what interest rate to offer?
Yeah, just like any other business, right? You kind of know roughly what your break-even margin is for all your products. And so if that's sort of your minimum cost to, get a depositor to leave money at your bank in order to then lend it out, then you've got to add in the risk of loss, the human capital required to actually manage those loans. And so usually you're trying to target some sort of return on assets or return on equity similar to any other business. So it really depends, though, on how much collateral is involved or not, right? Like, one of the main reasons why home loans have traditionally been relatively cheap is you obviously have a home that serves as collateral, and then you have the federal government who helps kind of provide a backstop to a lot of the mortgages in this country. Where we do a lot of our lending is we actually lend against a business's sales or what we call accounts receivable, right? Where basically a business says, hey, I've sold, let's say, $1 million worth of goods, and we say, okay, well, we'll give you maybe $500,000, $700,000 against that $1 million, so you can then turn around, buy more inventory, and they can keep selling. And so, we try to think that we take into account the risk of loss, the challenges of managing that particular credit. So, there's quite a varied range of interest rates that we charge at the bank, just like any other bank, just depending on the collateral involved, the type of client, challenges of managing the credit. But that pricing, does change as the Federal Reserve does change their rates. I would say the other key thing to realize is anytime that the Fed's increasing rates, they're really trying to slow down the economy, make it, make that break-even point, that break-even rate even higher, right? So banks are just disincentivized from lending more because there's just less people that want to borrow money at higher rates naturally, right? Versus when they take it down to zero, like they did after the financial crisis, they're trying to encourage banks and others to lend money and borrow money and get the economy moving, right? Because in theory, right, if you're borrowing money, you're likely doing something with it, right? You're buying a home, you're buying a car, you're starting a business. And so What we saw, the reason why they were kind of trying to slow down the economy was that inflation was getting out of hand. So now that we're hopefully in a more moderate period, banks and everyone are trying to react accordingly. I think it will be really interesting, though. I can't get a sense, though, that as we've moved from more of a manufacturing and agrarian economy to more of a services economy, I don't know how many businesses are slowing their, capital plans because of the rate of interest, right? Because there's not as many folks like waiting for rates to come down to build that massive new manufacturing plant, right? Some of that's happening, but not as much. So I'll be curious, like, as rates come down, it probably is just going to be more impactful to consumers like you and I who say, okay, now I can get into that bigger home or that first home because the prices are better. Or maybe I upgrade my car that I've sort of been holding on to for a while, but I'll be curious how much it really impacts businesses. So kind of bring it full circle. The challenges of pricing money is really hard, and you're kind of trying to constantly update our models on a month-to-month, quarterly basis. But it can be really challenging because, again, you're trying to land this really difficult plane of you want enough people to want your loans, but not too many people. Similar with deposits, you want enough people to want it, but not too many. So again, you're trying to play with all these market dynamics, and people can see what banks are charging, right? It's similar to like car buying, right? Like you kind of know a lot of the price of these things nowadays, and that's creating interesting challenges and opportunities to service clients in a different way.
Yeah, I have a couple comments real quick. Just wanted to, and then I want to ask a question about inflation. But I want to give you the opportunity to speak as well. But just an idea. First off, I have my phone here. I've gotten a few emails over the last probably 6 months from Tab Bank saying, hey, we're lowering the interest rate on your savings account. So what Alex was talking about, they're constantly monitoring their profit. Mm-hmm. Now, because I've been watching Wildcat Economics.
This is that gotcha question.
Yeah, no. This is gotcha journalism.
Because I've been watching Wildcat Economics, I see that and I go, oh, good. That means rates are coming down. Like, I'm getting less interest in my savings account because rates are coming down. Hopefully, that will, provide some other opportunity. I could refinance my house or something like that. But if I wasn't paying attention, I'd be like, what the heck, Tab Bank? You told me when I first started it was like 5.2, and I think it's somewhere close to the high threes. Mm-hmm. I have a total understanding of that. But that can sometimes be a messaging problem when, okay, now we've kind of gotten used to having these high yield savings accounts. And the yield just being, we're going to pay you this percentage a year. Why are you decreasing, all these things. And so it's important to understand what goes into this and what those signals mean. We've talked about before how price is a signal. Well, the price of money is a signal as well. And that signal is inflation is, well, we can debate this, but rates are coming down because inflation is starting to stabilize. There may be some political pressure there as well. But ultimately, that's a good example of, I see this thing on my phone, if I have an understanding what's going on, that I can make sense of it. The second comment I want to make was that agrarian to service economy. So in Utah, I'd say that we have a good mixture of both, but a lot of the disposable income does come from the service economy here, and mostly through software as a service. So if you think of a lot of tech companies here in Utah, what they're doing is they're building a software, which in and of itself is not very capital intensive. We can talk about, AI is creating need for more compute, which is actually causing us to almost revert back to capital intensive economy. But ultimately, the idea is that there's no inventory in software. Your headcount, your talent is how you build your product, and then you lease that product out to people through monthly payments. And so I work in tech. I'm an accountant in tech, so I really know this business well. And I've always noticed that, we're not as dependent on the interest rate, but what happens is typically these tech companies don't make any money. They're not profitable. They hopefully will be, but the idea is that they grow their top line very quickly, and then if they run out of money, they're able to go find funding from venture capital firms or private equity firms. These firms seem to be very sensitive as well to interest rates. So it's almost like we're indirectly hit with interest rates through how easy would it be to go and raise money right now? Well, in 2021, very easy. No one cared about profitability. You could just present a nice logo and you could get millions of dollars. And now that we're entering to this more, balanced economy with these various challenges around interest rates, venture capital firms, investors are much more strict with, well, you need to have this level of profitability and everything. So even though it's not a direct hit, I still think the economy's always impacted in some way, regardless of your capital structure or the type of business you have. You're always going to be impacted by this interest rate that's coming from the Fed. That's not even really a government agency. It's just it's interesting to think about there.
Yeah, and really, you're speaking basically to a lot of what I do. So in my job as a professor, we kind of make it this, the standard is half of my job is teaching, half of my job is doing research. And a lot of my personal research is dealing with policies, dealing with the Federal Reserve, a lot more nowadays with more national debt, stuff like that. Maybe there's a podcast episode for you. But it's one of those situations where we're constantly trying to figure out how do these interest rate changes filter through into the economy? Mm-hmm. Is it directly through the banking sector? And if we're getting into more of a service-based economy, then maybe it's less so. If it's less what we call capital intensive, it's less, building big manufacturing plants, needing tons of money just to get started, it might not have as much of an impact in that realm, via that route anymore. That's a big part of what us professors do is kind of research these types of nuances in the economy. How does policy actually work? I do have one quick question. So we were talking about financial crises, other things like that. Take me back to, I want to say 2022, March 2022, Silicon Valley Bank. And I remember this like it was yesterday. I remember it was a Thursday, and my wife got mad at me because I would not get off my phone. She's like, "What are you doing?" I was like, "You do."
This is Econ Super Bowl right now.
This is nuts. What's going on right now?
I have a similar story. Yeah,
yes.
This is
so
great.
Basically, overnight, Silicon Valley Bank, which is a huge bank it was like the bank to Silicon Valley. Basically, that's why they called themselves that, I assume. And suddenly,
highly, as someone working in tech, all of tech has an account with SVB.
Yeah, and it's a classic story of not diversifying, as a bank in terms of they cater to one industry, and when that one industry started to slow down, we saw a huge influx into Silicon Valley, into tech when COVID hit, because you had all of this digital stuff needing to be implemented and everything. So as soon as it slowed down, that bank suddenly comes out, makes a huge announcement basically, and it just flips the script, sends the entire financial industry into a tizzy. And next thing you know, Silicon Valley Bank is being taken over by the FDIC stepping in, and they're putting Silicon Valley Bank under receivership. And you have, I'm trying to think, Signature Bank was also in there. But I remember maybe it was that Friday, or maybe it was the following Monday. And I remember the Wall Street Journal had basically just on their front page, just a grid of graphs of all of these smaller regional banks and how tied they were to Silicon Valley and to these types of things, exactly like that. So basically it's like, here are all the other banks that are kind of like that. Yeah. And on there you had Zion. On there you had, I want to say, I don't know if Tab was on that one, but I know you had like some of the local.
I'm just going to go ahead and say no.
I
don't know what you're looking at. I would have been kind of surprised.
Yeah. So anyway, walk me through that crazy weekend.
Yeah, well, it's funny you bring that because I was married at the time, and my wife and I took our daughter to Discovery Gateway, which is a lovely children's museum if you have kids down in Salt Lake. And I think we were there Saturday morning. So Friday, I think SVB had just been taken over into receivership, which basically just means the FDIC deems them that they can no longer operate the bank. So the government basically takes it over to protect depositors. And my phone was just like blowing up, and it's similar kind of conversation. She's like, "Would you please get off your phone?" And I was like, "I just don't know how bad this is going to be." Like, trust me, I would rather be playing at Discovery Gateway, but like, I'm kind of worried about the financial system right now because I was still relatively young during the financial crisis. So I was like, "Oh no, like, what does this look like?"
Here we go again.
But this is a good example, from some comments that you were making earlier about like the government is really good about, especially bank regulators are really good about stepping in to try to avoid panics. We learned a ton from the Great Depression, and we really learned a lot more recently in the Great Financial Crisis. And the FDIC is really good at this. So basically what happened at SVB is they took on a ton of deposits. So when you were talking about, tech firms were able to raise a ton of money in like 2021, kind of latter part of 2020 into 21 and certainly into 22. Well, SVB saw their deposits almost double. I think it went from like 100 billion to about 193 billion over a 12-month period. And that's one of those examples where banks have to start kind of thinking opposite, right? Because like for most businesses, if they could accumulate inventory at really low cost, I'm going to take as much of that inventory and just start selling it as much as I can. For banks, well, we have to do something with that money, right? Because like, again, people want to get paid, an interest rate. And so what they did is they didn't have enough loans to make that would have really helped their profits. So they bought a bunch of long dated securities. What are securities? Basically, they pool a bunch of mortgages together and you can buy a portion of those mortgages. Or, right, the U.S. government sells treasury bills. You could buy those treasury bills. And banks are really restricted on what they can purchase, right? Because they're taking depositors' money. So the government who's insuring it, the FDIC who's providing insurance to the bank, doesn't want you just turn around buying like equities in some like, new company. Anyways, so they bought a bunch of those long dated securities. So they had what's called duration risk, meaning those startups who deposit their money with SVB, they could withdraw that at any moment, at any amount, right? Because they're demand deposit accounts. Whereas like as rates are going up, the value of those securities that SVB bought are going down, right? Because they were at yesterday's interest rates. So they start to have what's called an unrealized loss in their securities portfolio. And it shows up
accounting.
If you want to be an accounting nerd, it shows up in AOCI, accumulated other comprehensive income.
We got two CPAs here. So.
This is dangerous. Yeah. We're at risk of boring the audience. But to bring it full circle.
Risk of boring me.
Yeah, exactly. Effectively, what happened is that securities portfolio was so large and the unrealized loss was so large that some of Silicon Valley Bank's customers got concerned. And we'd never really quite seen this before where like everyone can access their banking on their phone. And so you had a lot of startup founders who were talking with their VCs and others and saying, hey, why don't we move some money out of SVB? Yeah. Well, you move too much of that money, they can't convert those assets, those securities into cash fast enough. I think during that week before they failed, they paid out $8 billion in withdrawals. And by midday Friday, I think they had gone up to over $40 billion, somewhere in that range. To check me on the exact numbers. And it was one of the few times that the FDIC actually stepped in midday. Usually they'll shut them down Friday, work through selling the bank over the weekend. And by Monday, you can use your debit card at a new bank and stuff. And so it just kind of was this unique situation where they took on a lot of risk that they didn't need to. And most banks were not in the same position. And the interesting part is Silicon Valley Bank did not die because they had to die or that they had made a bunch of bad loans. It was simply because they had just bought long-dated securities. As interest rates increased, the value of those securities decreased, right? Because like if I bought a pool of mortgages I was paying 3%, but now today's mortgages are paying 5%, or at 5%,
wants the 3%
no one wants
mortgages.
the 3%. So I've got to change the price in order to effectively make them 5%. Anyways,
right.
And so. But again, had those startups, and I understand why the startups were concerned. I'm not saying anyone's right or wrong in this situation. But had those startups left their money in SVB would still be in its same exact position because those would have paid off, those securities would have paid off, assuming that there's nothing wrong with those securities, which so far there hasn't been. Those would have just paid off and they would have just then made loans or something. But it's a good example where banks have this disparate, I call it like, may not despair, but they have this outsized impact because they're lending all this money all around. And that's why we're so heavily regulated through the Fed, through the FDIC, through state agencies, because if we mess up, it has a huge impact on the local economy, right? If a local restaurant goes down, that can be devastating for that local economy, but most likely it's not going to impact the state or at a national level. If you have enough banks that fail, it can be hugely disruptive. So again, SVB just took an unnecessary risk, and I don't mean to to overly emphasize their mistakes now that they've passed. Now, luckily, right, the bank, most of which was sold to, I think it was Citizens Bank, and so now they've kind of evolved to still basically doing exactly what they did. But again, it's just a good reminder of how impactful banks can be, why we're under so much government scrutiny, because as I talk with my banking friends, they're really frustrated by the amount of regulation. Not that every regulation is created equal, but the reason why they do that is because we, are holding depositors' money, and we need to make sure that we're acting in safe and sound ways. And so we try to really prioritize our relationship with our regulators.
Right.
And I know SVB did as well, but again, they just took on a lot of risk. And that's why not that many banks failed, because this was kind of an isolated case of only a few banks had kind of made some of these errors or took additional risk. But again, just as a reminder, that banks have this really massive impact, which is why we are so heavily regulated. But
it reminds me of the building and loan in It's a Wonderful Life. If you've ever seen that scene where the whole essence of the story is there's commotion in the town. People are worried that they're not going to be able to get their money out, and so they go on a bank run. And I think it's important that when you put money in a bank, that cash doesn't just sit there. And you talked about why it can't just sit there. It's got to go do something. And it usually, like inventory, instead of selling a product, you're selling a loan. And so what happens is, I believe a good amount of your dollar, let's say I put $1 in the bank, I think that 90 cents of that dollar can be lent out.
That's absolutely right.
And so if everybody at the same time, tech firms, SVB, building and loan in It's a Wonderful Life, if everybody goes to the bank at the same time and says, my phone or this certificate of deposit, if we're in the 1930s, right, says I have $100, I want to get my $100. Well, we only keep 10% of that on hand. And so the idea is that the economy works because everything else is working in line, and that the idea is that I put my money in a bank because I don't need all of it right now. And in return, I get some interest. Most importantly, I get the security of that money being held instead of putting it under a mattress and it being stolen, which is how things were going before we had fractional banking and all of these regulations. You would just lose your assets very easily. And so I think that's important. And I think it's important that I think banks have a bad rep sometimes. But if you think about that idea of how does UTOG or Taboo Bank operate?
Taboo Pizza, but yes.
Sorry, Taboo Pizza, Taboo Bank.
Don't sign them up for more businesses right now.
Taboo Bank and Taboo Pizza, Taboo Bank acquisition. I think we got some.
That's right.
There you go.
The idea is that, hey, you putting your money in the bank is generating the economy by allowing for that lending out. And then the Fed steps in and hopefully regulates that so that it doesn't get out of control too much, which is what inflation is. It's things growing too fast, like SVB. But also make sure that we're not operating too slow. And when times are bad, we bring those interest rates down to zero, which was happening, after the financial crisis and beyond.
And I'm so happy you brought up It's a Wonderful Life, because everyone thinks this is a Christmas movie. It's a banking movie. It's a beautiful banking movie. And
economics is everywhere.
That's right. Economics is everywhere. And when I give some lectures, and I always try to be like, this is not a Christmas movie. This is a banking movie that happens to be based around Christmas.
There you go. There you go.
But no, I thought you brought up some really good points there of that. The reason why our economy does work really well is we have a really healthy banking system. And the whole point of taking all this risk of, basically taking deposits and lending them out. And so you have a challenge of where you've told two different people they have access to the same dollar, right? Because effectively, banks only have to hold on to about 10%, give or take. Again, we have plenty of cash on hand in order to pay out people who do need to move money and stuff. And then, through the Fed and through other mechanisms, we can get a lot more cash. But the whole point of taking all this risk is to accelerate economic development, right? Like, so you can buy a house today versus having to save about 30 years worth of payments, right? Exactly. So a business can sign a lease today or buy equipment today and stuff. And if we all pool our deposits together, then, that can be lent out to help people. But it is it's built on trust. It is a really unique system where we do trust that, hey, these banking institutions, these banking firms are being held to a high standard by federal regulators and state regulators to ensure that deposits are being deployed in safe and sound means, and that as I need to access it, like I'll be able to and stuff. But it's this very interesting dynamic. But I do think it really creates a healthy ecosystem in the United States where, because we built up these banks, we've made them really robust. It does enable us to recover, I think, more quickly than a lot of other countries and ecosystems because we can get capital flowing faster.
Yeah. So I have a question, story first question that we can kind of use to start to wind this thing down. But
land the plane.
Yes, exactly.
Fed joke.
Now, you were talking about like not wanting to speak too poorly of Silicon Valley Bank, things like this.
Yeah.
As a professor, I love a good crisis.
Sure.
Like,
Lots of research topics.
Is that on the record?
yes, yes, it is. Because, when I'm teaching these classes, like, we talk about these different mechanisms, we talk about banking risk, and I was in the middle of teaching my money and banking class. And, one of the things we get, bringing this all the way back to the Fed, it's not only about guiding the economy, but they're one of the chief regulators out there. And the problem with that is that they do such a good job that we haven't had a true bank run in decades, right? You're basically going all the way back to the 80s, the savings and loan crisis, until for the last one. But I remember walking in that following Monday, Tuesday, whatever it was. I was like, guys, did you see that?
Yeah.
Like, this is a bank run. This is what I'm talking about. This is a classic bank run. And so, I'm constantly trying to pull examples from stories, but they're like so long ago and no one cares. And so when things are going well, the little things that we talk about don't really show up. When things break, all of that shows up real clear. And it's like, yes, this is why you should pay attention. But anyway, that's just my everyone else is worried, and I am genuinely worried for the people who are involved, and there is empathy there. Don't get me wrong, but also this is gold
from a teaching perspective.
Okay, so let's land this plane. I want to give this is the dismal science, as they call it. So sometimes we get talking about things like crises, and I start to get excited, and it's very weird. But you're seeing a lot of things out there in the community. You're talking to a lot of community leaders. What are some of the cool things that are happening out there? You're helping to finance that next generation of business, or that next business owner. If you got a couple off the top of your head, what are just some really cool things that we should be looking forward to in this local community?
Yeah. So TAB does lending all across the United States and including within the state of Utah. So we get to see a lot of different things. I get really encouraged when I got to go on a client visit recently and, met a husband and wife couple who have built up a specialty construction company from, nothing to 100 employees and $20 million of revenue. And they have ambitions to double, by next year. And, so we're talking to them, how can we help them with that financing? How can we help provide them a credit facility that grows with them? And that's incredibly exciting. Or even if you just bring it down to, here in Utah and Ogden, several years ago, Table 25 opened up. Justin and Jamie run it. It's this incredible restaurant. My goal is to try to become the top reservationist there, but I've got some intense competition. And it's that's a beautiful example of I'm sure at some level they got some financing, or at least they certainly, use a bank to be able to process their credit card transactions, do their payroll and stuff. And, so you can think about these large, massive companies that are maybe building large manufacturing facilities, but you can really distill it down to just your local Main Street businesses that are being benefited by the ability to access, loans and financing. And I think a beautiful thing about what technology has done is, we're able to find businesses all around the country, and vice versa. Businesses are able to find that kind of unique bank that's tailored to them, right? Just like there are banks, like Silicon Valley Bank, they're very niche. There are other banks that are really focused on just certain industries. And so I think, there's cool opportunities we're seeing out there. I think for students and stuff, it's just about, again, how do I gain more skills? How do I leverage AI to make myself more productive and whatnot? And just learning about money, because whether you are a banker, which I love banking and would love to encourage people to explore this industry, you're going to interact with a bank at some level, either on a personal level or through your business. And so if you can just better understand how banks work, how they function, it's going to just help you either personally and or professionally. But we definitely, as bankers, we feel the weight of the responsibility to be really thoughtful with how we're deploying our depositors' funds, making sure we're providing a great customer experience and whatnot. But again, we look forward to all the cool companies we're going to see as we keep moving forward, and all the things that technology enables us to do. But at the end of the day, I just try to think about all the small businesses that we're trying to help get off the ground, because these are people's dreams, right? Yep. And I know it sounds a little silly or hyperbolic, but we are trying to finance people's dreams, whether it's buying a home, buying a car, starting a business, and that economic empowerment that comes. And so, I'm incredibly excited about the future. I think it'll be really interesting to see, again, where rates go, where banking goes. But I think ultimately, when you look around, there's some really cool businesses, even right here in our local community, but certainly across the United States.
Yeah.
Very cool. Very cool.
Very cool. Yeah, Table 25, maybe a future guest.
Hey. I'm all for
on the
it.
podcast. I have been there
That's,
once. It was actually a lovely experience because
Yeah, I'm not competing with you, just to be clear. Like,
right.
it's, I know who they are. I've met the couple. They're very sweet.
yeah, I know. I'm 1 for 1 on my reservations.
For
so
one, nice.
if you've done more than one, you're beating me. Yeah, it's a nice, lovely little, like, we don't have a lot of fine dining in Utah, and it was a fine dining experience, so it was a lot cool. But yeah, ultimately the idea I think we've learned today is you have these big headlines, the Fed, and there's a lot of misunderstandings around the Fed, all the way from what they do to who they're controlled by. There's all these conspiracy theories. I think what we're learning essentially is your small little main street on Ogden is just as connected to the bigger scope of the economy as New York and San Francisco.
Yep.
When you go to work every day, like your employer, the investors in that company, they're all connected to a bank in some way. And that connection is all the way from getting a $1 million, $2 million loan to going on their phone and checking what their balance is. All of that is banking. All of that is, thankfully, in the United States, regulated. And it's what makes this country so competitive is that we have so much trust. Often a bank is called a bank and trust. And that word trust, I think, comes from the idea of banking, that I can put my money here, I can get a loan from this institution, and they're going to do what they say they do. And as long as I do my part, then it all works. When it doesn't work is
No
when
pressure.
Yeah. No pressure. But yeah, really excited that we have that here in Ogden, that Tab Bank's right here in Ogden. Like I said, it's right across the street from Weber State.
Absolutely.
And as Tab grows, the economy in Ogden grows, and the opportunities for students grow. I mean, you want these businesses to succeed. So I'm really excited to see Tab grow so much. When I started,
But not too fast.
But not too fast.
Right. At a reasonable, safe, and sound.
That's something I
Yes.
learned today, because coming from tech, it's like, how are we going to grow at 75% this year?
Yeah.
And I didn't know that a bank actually is like, no, we don't want to grow at 75% this year.
Yeah.
Yeah.
So-
outside of an acquisition, growing at 75%, your regulators would be very concerned. Like,
Yeah.
what is going on here?
Yeah, exactly. Well, Alex, thanks so much for being on the podcast with us today. I learned a lot. And again, I'm so excited that we have such a great bank right here in Ogden.
Yeah.
Anything else before we go?
No, thank you so much for taking the time out of your busy day.
Okay.
Thank you.
So,
All right. And I'll end it with just saying, do all the things that you do with a podcast. Subscribe wherever you are. We're hoping to get the audio out soon. Right now, we're just on YouTube. But we are hoping to get on like Apple Podcasts, Spotify, get kind of the audio out there for people like me who like to just listen to audio. And so subscribe. We'll
tell your
keep it
friends,
going.
tell your family. If you have any suggestions for other local companies you want
Yeah.
to see people come in and talk to us, leave us a comment, and we'll see what we can do.
Okay. Thanks, everyone.
Thank you.